call this meeting to order. Can we have the roll call, please?
Representing the State Treasurer, Ms. Glasser-Hedrick.
Here.
Controller Yi.
Here.
Ms. Higa.
Here.
Mr. Keeley. Here. And representing the Director of Finance, Ms. Ortega. Chairperson Rosensteel, you have a quorum.
Great, thank you. Good morning, everybody. Good morning. So our first order of business is the approval of the committee agenda.
Second.
No objection, we'll adopt the committee agenda. Our second item is the approval of the minutes. And I actually had one comment on them, if I can find it. It was just a date that I think needs to be changed. Just bear with me 1 minute. There was if you look on ARM 6, it says after number 4 that Mr. Keeley joined the dais at 1:09 a.m. A little late, Gary. One or the other. So, thank you. Do I hear a motion to approve? It was good that you were here, at least. Maybe not when the rest of us were, but.
So you won't say where I was, right?
I won't tell anybody.
Okay, good, thanks.
So moved as amended.
Okay. Second?
Second.
Hearing no objection, we'll adopt the minutes. So the next item is the annual report of benefit payment modifications. It's a consent item, and just for information. So anybody have any questions? Otherwise,
I have a question.
yes. I need to get you. There we go.
Great. Thank you, Paul. So the question, two questions, I guess. One is, I guess, confidence that the pension solution project will kind of help this, hopefully, make improvements to this issue going forward. Yeah.
So, Member Yee, certainly we are striving in the design of the pension solution to mitigate the risk of modifications to benefits. That's absolutely the goal. Mm-hmm. Some of the modifications, as you may read, occur within the first 6 months due to adjustments in reporting from employers. So again, that's a natural occurring adjustment. Mm-hmm. There are other adjustments which we're actually working to mitigate as we go through data preparation in terms of at the end of the cycle of benefits when we have a death, how we handle those situations. So I will give you an emphatic yes to that being our goal.
Okay, good. So then, given the large spike this year, do you expect then the level and the value of the cases to drop to prior levels after this year? This is kind of a one-time.
Right, so we did 2 data preparation fixes that caused the spikes this year. We have some more up for 17-18, but the volume and impact on actual retirees will be much smaller. So I don't want to say there are going to be none, but the scale is definitely down. We did the big adjustments in this past 16-17.
Good, thank you.
Great. Any other questions on this item? Okay, So our next item is item 4, which is the presentation of the financial statement auditor reports. So we have our friends from Crow here. There are 3 action items, but I think we'll take, hear all 3 items and then act on them at the end. So Brenda.
Great, good morning. Thank you, Chairman Rosensteel and members of the Audits and Risk Management Committee. So as an auditor, this is like the highlight of our year, is to be here in November and present the results of the audit work that we do for.
It's a highlight for us too.
It is, I'm so glad to hear that. We said it would be exciting this morning, correct? Yeah, thank you for that. So just appreciate the opportunity to be with all of you this morning. I want to also make sure that I have an opportunity to thank management for their diligent work during the entire audit process. It certainly is a very robust process. They do an excellent job of providing us information on a timely basis, responding to our inquiries openly, honestly, and transparently. And as auditors, I'm sure you can appreciate, we do make a number of inquiries throughout the entire audit process. So we do appreciate their efforts. I know there's been a lot of competing interests within the organization with implementation of the new pension solution, so there's no shortage of day-to-day responsibilities in addition to fulfilling the requirements and the requests of the auditor. So again, thanks to the members of management in the room and to your teams for your diligence in that effort. I think our presentation, is it going to pop up here shortly? Do I need to do something?
No, they're going to pull it up for you.
Okay, great, thank you.
We new clicker for you.
Yeah, I like the clicker, thank you. It's very self-explanatory.
Exactly.
We have a pretty brief agenda this morning as it relates to the financial statement audit. First, I'll cover our engagement team, and Kevin and myself is the presenters today. We'll talk about the 3 deliverables and items 4A, 4B, and 4C. We'll take questions at the end, but really, as we have in the past, would appreciate your questions as we proceed through the presentation so we can address those timely and thoroughly. Consistent with prior years, we've really had the same engagement team, and especially the leadership team of the engagement team from a partner and senior manager perspective. So with you today, obviously, is Kevin Smith and myself, Brenda Torres, the lead partners on the audit engagement, but we certainly have a number of other members that support us in this endeavor, a couple of partners overseeing the investments portion of the audit, and a host of senior managers also overseeing the employer audits, the investments, the member data, and as well as contributions and benefit payments. So very much a robust team, and again, appreciate management responding to those requests. Our understanding is that management will provide an in-depth presentation of the financial statements at a later time, so that is something that we're not going to cover here, and we're really just going to focus on walking through the deliverables that we've prepared for all of you. And then we were also engaged to perform some special purpose audits, and we'll have an opportunity to come back and join you under agenda item number 6 to talk about those audits specifically. So if we could get into item 4A, if I could direct your attention to ARM page 18 in your materials. This is the independent auditor's report. It does cover the fiscal year ended June 30th, 2017. I'd just like to go through a couple of those highlights. I want to make sure that you have the understanding that we performed our audit in accordance with both generally accepted auditing standards as well as government auditing standards. And it's important to note that, and it really drives some of the deliverables that we'll present here today, primarily in item 4C. If you want to look at ARM 18, I want to make sure you understand that the financial statements are management's responsibility. They are certainly not the auditor's responsibility. So the preparation and presentation of the financial statements needs to make sure that they are prepared in accordance with accounting principles generally accepted in the United States. And that includes the design, implementation, and maintenance of internal control relevant to the preparation of these financial statements that are free of material misstatement, whether due to fraud or error. Our responsibility is to plan and perform the audit to obtain reasonable assurance, so reasonable and not absolute assurance, about whether the financial statements are free of material misstatement. We do not audit the internal controls of the system per se. It is our responsibility to understand the internal controls of the system, to design the appropriate audit procedures to make sure that we mitigate the risk of a material misstatement, whether due to fraud, error, or deficiency in internal controls. If you can turn to ARM 19, at the very top is the opinion paragraph. And consistent with the previous years, we are issuing an unmodified opinion on the system's financial statements, and that's what the first paragraph covers. And in addition to that, really important note, we have 2 emphasis of matters paragraphs. These emphasis of matters are consistent with previous years. They cover the net pension liability of employers and non-employer contributing entity, as well as the fair value of investments. These are additional communications in our report when we as auditors consider it's necessary to draw the user's attention to such information that we believe is very important to the users of the financial statements. Our opinion is not modified with respect to these matters, it's just to accentuate and emphasize for you these particular matters. As it relates to the net pension liability, the most significant items relate to the amount of the net pension liability, so the $92.5 billion is disclosed in this particular paragraph, as well as the actuarial valuation and the sensitivity to the actuarial assumptions that derive the total pension liability, if you will. So the key assumptions would be the investment rate of return, the consumer price inflation, the wage growth, and the mortality tables. And all of you should recognize that you did approve those assumptions. It was based off of the experience study that was recently performed and approved by the board, as well as setting those assumptions, and there were many changes to those assumptions in the current year. The fair value of investments, what we want to talk about there is about 25% of the investment portfolio is the value of those investments, of the alternative investments, primarily in the areas of real estate and private equity, are derived by values that are provided by the general partners and investment advisors. So when you think about, we talked last year about the implementation of GASB 72, the inputs into the determination of fair value, it's important to note that many of these investments are valued either as net asset value as a practical expedient and other observable inputs. So just to let you know the significance of the portion of the investment portfolio. Also on ARM 19, we talk about the required supplementary information. So there are the additional schedules as well as management's discussion analysis. That information is unaudited. We certainly do look at that information to make sure it's consistent with audited financial statements, but we do not opine on that particular information. On ARM page 20, the supplementary information, the schedule of administrative expenses, investment expenses, and schedule of consultant and professional services expenses are audited in relation to the financial statements as a whole. And with that, I'll turn it over to Kevin.
Thank you, Brenda. If you would join me at ARM 98, these are the required communications under professional standards that we communicate to you at the conclusion of the audit. Several of the items that we'll go over are fairly consistent with the information that Brenda just mentioned within the opinion as well. So again, I would reiterate that we fulfilled our responsibilities under both generally accepted auditing standards as well as government auditing standards. Our planned approach to the audit that we communicated to you back in April, we continuously refine that, obviously. It's an iterative process from an audit approach, but there were no significant changes in that approach or the assumptions and presumptions that had been made at that point in time. So what was communicated to you, what was effectively executed throughout the engagement. Just to highlight some of the key considerations for fiscal year 2016-17, one of the things I've learned over 7 years of working with CalSTRS is that no 1 year is alike the next year. So these are some of the things that we really had to think about and address in the current year. Results of the actuarial experience study and changes in the actuarial assumptions. I think Brenda discussed that to a sufficient level, but again, with the current year, actually had the experience study, which looked back 4 to 5 years of actual experience coupled with the new valuation, both from a funding perspective as well as a financial reporting perspective. We spend significant amount of time, both as auditors as well as using our auditor specialists to understand those assumptions to determine that they're not unreasonable. She highlighted those areas that are of significant concern: long-term rate of return, mortality tables. Those types of information have been subject to significant test work and understanding. And we conclude that they're not unreasonable and are a sound basis for the information that's disclosed within the financial statements. Her second matter of emphasis, the existence and valuation of the investment portfolio. This is where we spend a significant amount of time of our audit effort, both testing the existence of the underlying assets. You know, you have an investment in a private equity. We want to make sure that that private equity firm exists, that the underlying assets exist before we ever even turn our attention to, is it valued properly? And then we spend a significant amount of time there as well. Coupled with some of the things that Ms. Madsen brought up earlier, the impact of data cleansing process and preparation of the data migration, those impacts could have a material, or we could, in theory, have a significant impact upon benefit payments, contributions, et cetera. So really understanding what is that process, what is the information that they've changed, how significant to the financial statements in the current year, understanding that and testing that was a significant focus. Management has also done a tremendous job in implementing an enterprise risk management system. I'd still say it's somewhat in its infancy stage or somewhere past infancy, but it's definitely maturing. But we like to understand that for a couple of reasons. One, it can have an impact upon the overall internal control structure, as well as oftentimes enterprise risk result into financial reporting risk. So we really try to understand what management sees as far as their long-term and short-term horizon, their risk assessment, the risk accumulator, the inventory of their risk, and how does that ultimately impact the financial statements. GASB 74, we will talk about briefly here in this agenda and at a greater level in agenda item 6. But GASB 74 and 75 are similar to GASB 67 and 68. It really impacts your contributing entities or the employers. 74 and 75 relate to other than post-employment benefit payments, health insurance, life insurance, things of that nature. To many of your peers across the United States, GASB 74 and 75 will have a tremendous impact, so it was clearly a focus of our audit to understand exactly what post-employment benefits you provide. As you will see in item 6, they are very immaterial to the overall strip in what you do provide from an OPEB standpoint. So it was a focal point of our attention. We would consider kind of the implementation of it as significant in the current year as far as their understanding and their scoping of that. But it's not one that I would say has a long-term impact upon the strip or upon CalSTRS. It was understanding the impact, quantifying it, and moving forward. The other required communications, so we spend a significant amount of time looking at the qualitative aspects of significant accounting practices. If you turn to page 2 or ARM 99, we walk through each of those items. What we would say is that management is consistent with their accounting policies from year to year. I don't find them to be overly aggressive. I don't find them to be overly conservative. They're based upon the underlying books and records and previous experience, as well as assumptions that they make about the future. I find them to be based in, or to be very qualitative, or past that aspect of qualitative aspects. Probably the most important part of our required communications is the corrected misstatements or uncorrected misstatements. One can receive an unmodified opinion and still, have required 25 or 100 adjustments to get to that unmodified opinion. That's not the case with CalSTRS. As Brenda said, the financial statements are the responsibility of management. And I would tell you that the final product that's in front of you is materially consistent with draft 1 that we received at the beginning of the audit. Mm-hmm. Through our audit procedures, we identified no adjustments, either corrected or uncorrected, that we believe to be necessary in order to state the financial statements in accordance with generally accepted accounting principles. Beginning on page ARM 102, we go through a variety of other communications that under the standards we're required to communicate to you. I won't read each of those to you. I will just tell you that the answer to each of those are in the positive, the way that you would like for them to be. We had no significant difficulties encountered during the audit. We had no disagreements with management, et cetera. And in summary, that is our required communications to those charged with governance. If you would turn to ARM 105, our third and final deliverable is the independent auditor's report on internal control over financial reporting and on compliance and other matters. This kind of is a circle back to two separate points that Brenda made in her opening. We perform our audit in accordance with generally accepted or government auditing standards. This is a required deliverable from that. What this report is designed to do, although we don't issue an opinion upon financial statements, we're required to evaluate all deficiencies and then accumulate those and determine whether or not they are considered to be significant deficiencies or material weaknesses. The threshold for that is relatively low. But if I put it in layman's terms, significant deficiencies and material weaknesses are supposed to be those types of things that those charged with governance should know about. They should be the one, know about it and understanding what management is doing to address them. We noted no significant deficiencies or material weaknesses in the current year, which is consistent with last year. We did have deficiencies, which we reported to management, understanding their goal for transparency. I believe they're going to be communicating those to you in a separate section of today's presentation. But I would highlight that in that, again, we are under professional standards required to report to you significant deficiencies and material weaknesses. None of the items that you will hear about later rose to that level. That is the final report. So Brenda or myself would be happy to answer any questions related to the conduct of the financial statement audit.
Great, thank you. Bob, do you have any comments before we go to the?
Of course we're coming back. We're not leaving.
No, I mean,
We're-
today you're coming back.
Oh, we're available. Absolutely.
Great, well, any questions from members of the committee? Harry?
No questions, just a comment and congratulations to the staff and the team. 2 years in a row, no significant weaknesses or material weaknesses or significant deficiencies. That's certainly news we like to hear. And I know that's a lot of hard work to make sure that that happens. Thank you.
Great. Well, I have a few questions, and again, thank you very much. It's good news, and we're happy to hear it. As Harry said, everything we heard from you was good, and I know we've got some other things we'll be talking about later today. But I did have a couple of questions, and one of them actually was something, Kevin, that you mentioned. You said. You mentioned the enterprise risk management system and how, that's a positive development, but you said it's still just a little bit beyond its infancy. Can you tell us what you would like to see as auditors to be comfortable that we have an enterprise risk management system that's more than just in its infancy?
I'd be happy to, and I would say, Chairman, that I did not mean any disrespect by calling it in its infancy.
I didn't take it that way, but
And-
I'm looking for improvement.
and
you
in
seem
many
to suggest
cases-
that there might be.
And in many cases, I would say that from a PERS standpoint or from a governmental entity, you guys are actually leaders in trying to adopt your enterprise risk management. So that's where I would classify it being more in its infancy stage versus being an actual kind of functioning independent, role within the organization. I think that as you continue to improve, which I think will be a natural function, you will continue to move up that life cycle. So I'm not saying you're in its infancy stage and I think you should be farther ahead. I think the information as auditors that we get out of the enterprise risk management is incredibly valuable to us. I think it's been valuable to management and I think it will continue to improve.
Okay. So you don't have any specific recommendations for
No,
the
I do not.
improvement okay, good. That's good news too, then.
Yes, it is.
I appreciate that. I think I've asked this question in the past, but you know, several times through these materials, you mention, you point out the valuation of investments, and you say that that they could be materially misstated, but that doesn't affect your opinion that the audited statements are accurate without any, in all material ways. So since the valuation is so important, can you explain how that could be materially misstated, but the financial statements are not?
You want me to take a shot at it?
Yeah, go ahead.
In a lot of respects, I believe that the GASB has really helped us out as auditors as well as a board. If you think of over the last 7 years, we've had this emphasis paragraph. And ultimately what we're trying to say is that we believe they're valued appropriately at this point in time. That's why we believe there's not a material misstatement. But what the GASB has done with the implementation of GASB 72 that Brenda referenced last year, we really kind of broke it up into 3 categories, level 1, 2, and 3. And the important point to note as a board member is that level 1, 2, and 3 has nothing to do with whether or not it's going to achieve its stated rate of return or its benchmark yield, its overall safety, et cetera. It's truly saying, how was it priced? Level 1 just means we can go to an active market, the New York Stock Exchange, and on June 30th see exactly what its bid and ask price was at closing. Level 2 could be a U.S. Treasury. One could argue is safer than some of the global equities that we just said was level 1. But because it may not be actively traded, we're looking at observable inputs and determining what that price is. So it's a matrix, if you will, versus an actively traded. Level 3 just takes another step away from the market. So there are observable and unobservable inputs that determine what they believe that fair value to be. And ultimately, that's what we test. So we agree with the fair value that's stated. But as we move down that continuum of level 1, 2, and 3, it becomes a little more fuzzy, if you will, because it's not based upon an active market. So as an auditor, we're just trying to point to the reader, a significant amount of the portfolio is based upon unobservable inputs. There will be changes. The one number I can predict that it's not going to be is what's reported right now. Markets change. It's an estimate. We believe that it is materially correct, though.
I think the only thing I would add to what Kevin said is, so when you exit one of those investments, and whatever the proceeds are when you exit that investment is fair value at that point in time. So I think that's the difference of the measurement date at 6/30 versus in the future, there could be a material difference depending on what happens between the measurement date of 6/30 as well as when that investment is sold.
My one other question is it's on ARM 103, and there's the statement, we would like to inform you that although not materially inconsistent, there are inconsistencies within the basic financial statements as well as the MD&A in the presentation of investments in accordance with generally accepted accounting principles versus how the investment portfolio is managed, as well as actuarial valuations used for funding versus financial reporting. Can you explain a little bit more about that?
I can,
Okay.
and I will welcome any.
Looks like you're gonna have,
I'll welcome
there's a joke here?
No, I'll welcome any comments from Brenda afterwards as well as management. I think that management tries to do a tremendous job of anticipating the needs of the readers of the financial statements. I, as an auditor, would like it to just follow generally accepted accounting principles. How the investments department manages and classifies their investments is not necessarily how the people in Norwalk, Connecticut would say, this is how you classify your investments. So there will consistently be some inconsistencies with how the investment have said we report and how GAAP says they will report. Now typically, and I'll use made-up numbers, if investment says they have $100 in investments made up of these 4 portfolios, all with $25 each, GAAP may have come back and said, well, actually, there's 5 classifications of $20 each. Management in their financial statements really tries to do a good job of bridging the differences between how they've reported under their investment portfolio and how they're reporting under GAAP. I, as an auditor, wish that we would just follow GAAP, so it's probably me just being a little cranky as far as that goes. The same could be said from an actuarial valuation standpoint. You use a lot of what you focus upon is from a funding aspect. GASB 67 required it to be a specific valuation related to financial reporting. Management tries to present both results and bridge the gap. I would prefer for it to be just the financial reporting. If I was in management's shoes, I might come back to the same conclusion that they have, that it's important to report both of them. We don't have audit differences related to it. We have not called it a deficiency, but as you read the MD&A, sometimes you will see two different numbers that could seem like they should match, but it's based upon how management accounts for it or reports it, or how the valuation fund or the funding or the funding valuation versus the financial reporting valuation, or how the investments are classified within the financial statements.
Could you give me an example of one of these inconsistencies? How?
I have it open, I don't know if you want to. Sure. So on ARM 21, Paul, we report the, Kevin, forgive me if I'm not, I think I'm focused in the right place. So on ARM 21, under the mission statement, we talk about the portfolio return, and then it's footnoted to explain that that's the return based on performance criteria. In the next section where we talk about the year-end review and the actuarial experience study, that's talking about things from a funding perspective. So what we're trying to do in the MD&A is bridge the financial statements to the other publicly disclosed documents so that the reader can understand that the numbers are different because there are differences in methodology, and that they don't question the accuracy of both. So that's the communication we're attempting to support, but it does give an opportunity for conversation about, and that's where the smiles are coming from.
We have a lot of conversation.
How far we are afield from the accounting standards and the value of those disclosures in the MD&A, in the management discussion and analysis. So there's a tension there, and you know, I think it's a healthy tension because we want to present financial statements according to GAAP. We definitely want to do that. But given our situation and all of the various communications we have with the public, we also feel that it's very important to share how those things differ and that there are legitimate differences.
Yeah, I mean, it seems to me to make sense because we know that the actuarial rules and the GAAP rules are different in terms of how, you know, whether we're doing market value of investments or not, different things like that, that it would seem to me makes sense in the MD&A, which is the management's discussion. So I would think it could be broad enough legitimately to bridge that gap. I don't know, Bob, if you have any thoughts on this matter. 'Cause everybody at the front here is smiling a lot, so let us in on the joke.
It's going to be a long meeting. Sure, just my 2 cents. Look, if I didn't see management proactively trying to make the information digestible to a broader audience and just left it only as GAAP, Kevin would not be cranky. But then again, there are many constituencies that might not understand how that data relates to other data in the report or relates to them. And so my concern would be if I didn't see that, then I would think, well, management's not doing all that they can to make this difficult to understand information a little bit more accessible and meaningful for various constituencies that are going to use it and rely on it. The issue is, are these differences, do they amount to a level of materiality? And the answer is there. So, no. So that's sort of what I look for. And I'm pleased that it's there. In fact, I'd be shocked if it wasn't there.
Robin?
I just wanted to bring your attention to another example that perhaps helps articulate this. If you look at ARM 34, we try and map the asset class and strategy to our actual presentation in terms of financial statement classification of those assets. And you'll see that our portfolios include various types of instruments that from a financial reporting perspective, we array differently. And so again, that's here so that people who are not as familiar as we are with our organization can understand the translation.
Robin, I'd say that that's part of that healthy tension that she referred to earlier. This is a new table. So again, it's us saying, okay, we understand GAAP, we know what you're trying to say, but how do we make this easier for the financial statement reader? So completely understand.
Okay, thank you.
Thank you for your.
Yeah, thank you. I don't have any other questions. I don't think anybody else does. So we need to adopt these three statements. Is that right, Larry?
So you would have a motion to accept the independent auditor's report, the report to those charged with governance, and the independent auditor's report on internal control, and then adopt the resolution on ARM 96.
Okay, great. And so would somebody like to make such a motion?
Yeah, I'll move.
Okay, moved, seconded. All in favor?
Aye.
Opposed? Great, thank you. Thank you very much. And now we can move on to item 5. I would, items 5, 6, and 8 talks quite a bit about controls over member data. And at least this member, in reading the material, found it difficult to follow what was being said from one document to the next. So while we're going to start with item 5, I think we're going to try to give an overview to begin with about what these various communications about controls over member data say in these various agenda items, so that we hopefully will reduce some of the confusion. So with that, Larry and
Sure, thank you. So as you heard in connection with the financial statement auditor that was just performed, the auditor can become aware of deficiencies, and they noted that there was no significant or material deficiencies that they identified. However, there are those that are less than significant that they bring to management's attention in the form of this management letter. And it's for transparency purposes, we like to present this to the committee so that you could stay informed as well. And really, there's kind of two issues here, main issues in this report. And the first one is over active member data with regards to completeness and accuracy, and the second is over the monitoring and access to a couple of our primary systems for the START and the SOS system. And so I'll try to first address the active, member data issue that you just talked about. You might recall that a few years ago, this was a material issue, and management has worked really hard in the last couple of years to try to address it. And they have implemented measures and such as data analytic approaches to it that's addressed here. Also, they developed a risk and control matrix, it's called, and what they did was they went through and they documented all of the primary processes in the organizations and the systems that use member data in order for us to conduct our work. Now, while this is not listed as a significant or a material issue, member data is very important to CalSTRS. In fact, many of our business processes rely on that information that's provided to us from the employers. So our actuarial valuation is determined based on that information. Our financial reporting is done. The benefits that we pay to our members is determined on that information that's provided by the employers, as well as the associated contributions that are used for investments. Right, so it's really, really significant and important to us as an organization to understand it. So the accuracy and completeness is something that we have struggled with for the last couple of years, and in part it's kind of we don't know what we don't know. And in other words, but yet our business model is dependent heavily upon this information coming to us that's accurate and complete. So over this last year, we had a recommendation to take that internal control matrix and start testing some of those controls. And so internal audits performed a test there, and I'm going to address that in just a second here. But when you think about the issue itself here, it's kind of multifaceted in that there's really three components to this. One is first address the accuracy and completeness of the information that's coming to us. Second part of this finding is to enhance the control matrix so that we can identify the key controls, link those to documentation, and make sure that they're implemented and operating as they're supposed to. And then the auditor kind of adds a word of caution in here on ARM 110. And they say that specific attention focus on these efforts may be necessary as resources are diverted to implementation of the new pension system. And so we don't want to compromise our efforts to date, and it may require some dedicated time and resources towards it. And then finally, they acknowledge the efforts by internal audits in what we did. And then they add another word of caution, and they said that understanding the scope of the audit is important so that we continue to make progress and not delay the efforts to address the finding, especially with demands on our resources while implementing the new pension solution. And so while recognizing this audit was the first one that we had done with regards to member data and using that control matrix that was prepared by management, we looked at about 30 different controls across the organization and what we would call a key control, which in other words, in the absence of this control, it could reduce the risk to an unacceptable level and may lead to errors in financial reporting. And so we keyed in on what was really, really important. And the objective of our audit was really to provide assurance that these controls were first documented and that they were operationalized and that management implemented them and that they're working as intended. And so those were the primary things that we looked at. And we observed staff performing the processes. We performed testing of the processes, and we looked at the system input and output to ensure that those system controls were working. But what we didn't do is we didn't assess necessarily the design of the control. In other words, is it the most effective way to do it? Could this manual control be automated, for example? Or is there another approach? And we didn't look at the control structure from, say, an end-to-end process with regards to, like, for example, benefit payments, right? So we just looked at the key controls throughout the entire environment, if you will. And so what we found, though, was that testing of those 30 key controls is that management had implemented them, they were documented, and that they were operating as intended. And that's really good news, right? But when you think about, say, for example, the benefit payment process that I just mentioned, we could have the controls in place over member data that ensures that data is used properly, that the benefit is calculated properly, but at the root of it, that data, if that data is inaccurate, then maybe the member isn't getting the right benefit amount. And that's where kind of the crux of this issue really lies, is making sure that underlying data is accurate and complete. And so what we do and how we know that it's complete and what efforts do we make? Well, in our audit plan, you'll see that nearly 50% or 25,000 hours is dedicated to performing audits of our employers. And the primary objective of those audits is looking at the accuracy of the reporting of that member data to CalSTRS. We have financial services and audit services are collaborating on the use of data analytics. And for the first time, we'll be using data analytics to perform what we call limited scope audits, where we're actually going to take that information and go to 20 different school districts where we've identified these data anomalies and really find out what it is. Because while we might see an anomaly in the data, until we identify what it was for and if it was valid or not, we really don't know, right? And so this will be a first time we're going out and doing a test like that. And then we've implemented certain controls that filter out reporting errors in our current systems. We're designing those in the new pension solution. And then also management is pursuing legislation that will help us strengthen the accuracy and our ability to validate kind of the completeness and accuracy of the information. And so those are outlined in ARM 111, but the auditor also had another recommendation in here about expanding the scope of the internal audits to evaluate the effectiveness of the internal controls. And so you'll see on ARM 353 in our proposed audit plan allocates approximately 3,000 hours to 5 audits of internal controls over member data, where we will look at the specific business process from end to end, and we'll be able to evaluate the entire control structure for that particular process rather than those key controls. And you know, so we have a significant amount of resources that are allocated to it. It demonstrates the importance of accuracy and completeness of the information, and it helps us to really focus in on that area. At the end of the day, you know, will this issue ever go away? You know, it's something that we always will have to keep on top of. It's something that I think that until because we don't get 100% of the information from the employers, right? We get just creditable compensation. So their total salaries and payrolls is parsed out, and until we really have a way to identify that which is creditable and necessary for calculating retirement benefits, you know, it's an issue that we will always be dealing with, and it's an important issue, but it's something that I think that we're going to continue addressing over time.
And maybe I'll supplement that with a little bit of hope or a glimmer of process change that could lead to our ability to do a better job of assessing completeness, which is really one of the first issues, is how do we know we got everything? And then how do we know that when the reporting for someone stops, it's because they left employment? I mean, so those are issues that we deal with on an ongoing basis. And so part of the design of the pension solution includes the opportunity for new file formats, and some of the things we're asking or considering are to get hire and termination records so that we understand when employees come on and off of employer's payroll, and then also to get the total compensation, what we call the EDD tax data, so that we have that comparison. And we've, in addition to exploring access to that through legislation with EDD, we've also engaged certain employers and have found that they are willing to send us their reporting data that they use for tax compliance purposes, so we can compare that to credible comp and see how valid that kind of analytical review would be to determine if there are gaps that we should need further information to understand. The other thing is, with the availability of this tools to analyze contributions on a macro basis, I mean, we really are mining those, just looking for variations that are assigned to special compensation, or someone who's got a spike in compensation being reported to the defined benefit plan. We are identifying those, working with audits in terms of providing those as potential opportunities for these 20 reviews, and then also working in concert with the actual employer to say, is this right? You know, and those kinds of contacts are very fruitful. And so our team is really working with employers through our member account services area, as well as directly in conversations about the reported lines to help us illuminate what's happening here, because we all want to give the member the right benefit. I mean, that is the goal. So those are the things that I would say to augment where we are today and where we want to be in terms of a future vision, so that we can in fact give you more assurance that what we're getting as contributions is not only right once it gets here and is being processed, but the right things are getting to us.
Bob, you have anything to add there? No? Okay.
Do you have any questions?
I mean, I don't. I think this helps put in context, you know, what we're hearing from the auditors, what we're hearing in these various agenda items, an explanation of, you know, looking forward to the item about the audit plan for the coming year, why there's a very large allocation of hours to this issue. Especially because, you know, controls over member data used to be like a material weakness, and so when it disappears as a material weakness, we think it's solved, and obviously there's still a lot of work to do. It's just not at the level of a material weakness anymore. Is that an accurate way to describe it? But we're still working on it.
Right, so in terms of the impact on revenue, as we presented in the financial statements, the accuracy there, you know, the way I interpret the audit comments is that at that level of presentation, in terms of the revenue base, we're confident that we're materially correct.
Right, and the auditor's concern is, you know, while we believe that our controls internally, once we have that member data, are sufficient and operating as intended, but that we don't just think that it's, you know, everything is okay. We still need to continue with our efforts, and they recognize that resources are stretched thin with pension solution, and so don't rest on our laurels. We got to keep on top of this, is what they're saying.
Okay. Well, let's then go back to the agenda in the order in which it's presented to us. So is there,
You have a question?
oh, I'm sorry. Yes, Jeree.
This is just more of a practical question, but I don't sit on the appeals committee. Are there people that are coming to appeal their retirement benefit decisions because there was a misrepresentation of creditable service reported by their districts? Is that common?
Again, statistically, I wouldn't say it's measurable, but it happens.
Okay.
It happens.
Thank you.
Okay, so let's go back then into item 5, the management letter. Is there more to say about that, Larry, Robin?
I actually would like to, the other thing that's in this member data observation and our response is in fact, something Kevin alluded to earlier in the maturation of the enterprise risk management process. So we have an enterprise risk management structure, we have an internal control framework, we have processes and procedures. And this comment really relates to getting those things linked and making sure that as we reassess risk on an ongoing basis, we're also looking at the effectiveness of those controls and then the impact that any changes in the operating environment and the risk framework would have on processes and procedures. So I think this is a good illustration of the work that we need to do going forward to make that enterprise risk management framework more robust. And I call it the connection between the layers. And part of it is a matter of, you get the three things going, you've got to build the link and help everybody understand that it's an ongoing process. It's not one and done. It's something that's part of our ongoing management responsibilities. And so that's another part of this. And then I think in terms of access controls, the responses there are really, we understand the areas they're pointing out, and we've got plans to get the gaps filled within the next several months. So if they're not already complete. So those are things that have a very quick turnaround.
Yep. With regards to enterprise risk management, just to kind of thread that a little further, you'll notice on ARM 347 in our proposed plan, under internal audits, item number 1 there is our enterprise risk management framework in the organization that's been in place now for a few years, and we will be proposing an internal audit that will look at some frameworks and do some comparisons and maybe have some findings or observations about how to continue to mature the program.
Okay, great. Sure.
Yeah, so Larry, the explanation and kind of bringing everything together was really helpful. I guess my question is, you talked about the controls that we can have internally to look at how our process works. But if the data that's fed into our system is not accurate, that's something that we also need to look at addressing. So we're doing, we do employer audits, we may be expanding that. Is that something that we anticipate will, for the foreseeable future, need to continue to emphasize or expand the resources needed for doing those employer audits? Or is there some kind of, measure that we may have to assess whether we're getting better data, we have better confidence in the data that we're getting in so that we feel more comfortable with the data quality?
Yeah, I think there's two parts to that. First is, are we doing the right number of audits? And so we point out a little bit later in here that in the last 5 years, you'll notice there's a trend, an increase of the number of audits that we're doing. But more importantly is there's also a sentence in there that talks about the percentage of active member data that's being sampled. And so in the last 5 years, we've looked at about 55% of our active member data in as far as our sampling goes. And I think that that's really important. And so based on that, I think we're in a good space as far as our level of coverage is concerned. And however, I think we can enhance it through the use of the data analytics that we talked about. And it was something that was also mentioned in our quality assurance review that, it's something that internal audit programs commonly will do as part of their audits. And I think we'll see a lot of benefit from that. With the access to the data now and our ability to data mine it, it's going to really improve. And so in the plan this year, we have 20 separate audits where they'll be really focused on those data anomalies that we identified. And so this is where we've attempted to work with the employer and said, hey, what is this? And can you explain it to us? And we're not getting all of the information that we need yet. And so we're going to pay them a visit and determine whether it's valid or not. It could very well could be valid, but we just don't know until we look at it. So I think with that enhancement to the entire audit program, we're in a pretty good situation now going forward, where we've ramped up the number of audits and then implemented the data analytics, and I think we're in a pretty good place.
And then I guess if we are successful with some of the legislative activity, Robin, that you talked about, so that we have access to the data that we can use the analytics to sample it,
Right.
that'll contribute to the solution as well.
Right, and we're really in I will say nascent stage of learning how to use the data for identifying anomalies. It is good work, and the staff assigned are excited about it because we are able to identify areas where something just doesn't seem like it's consistent. We don't know if it's right or wrong, but it's inconsistent. And so, often we can make a call and it's fine, we understand, but in other cases, that's not happening. And so as we can become more effective with that, we're gonna get broader coverage. We might be able to reuse some resources that are dedicated to other things now to help increase the coverage that way. But we're trying to start small so that we can develop our methodologies, be comfortable with that, make sure we're effective, and then partner with both audit services and MAS to tackle the overall issue. So it's an area that I'm really excited about. I happen to love data, and it's a good way to use the information we're getting and I also want to share with the employer community that it really has value, because I don't think anybody wants to pay the wrong benefit. That's not what this is about.
Great, thank you. Good, anything else then on item 5? Otherwise, we can move to item 6, which is the audit plan year-end results. But thank you, Robin, thank you very much. Larry, thank you. I'll echo what Joy said, putting this all in context and explaining it is extremely helpful, and appreciate the effort you've gone to.
This is the highlight of my month as well.
Well, this is just
opportunity.
complex stuff, and it's very important, and so it's very good to see the the focus on this, because we do want to make sure we get the right data, and then we do the right thing with the data when we get it. So, thank you.
Exactly.